Hello, everyone. Welcome back to the Prospero.ai stock market live streams. We had some Jerome Powell comments today that are sending the market lower right now. The QQQ is approaching 4% down on the day. The SPY is approaching 3%, Dow Jones 2%, and Russell also 2%. It was a pretty normal day until Powell spoke, so we'll go over the comments when George gets in here and what he said that's sending the market lower. The VIX is now up 10% on the day as well. And we highlighted the 30 level in the VIX on Monday. And it's again testing that level and bouncing off of it higher. So it looks like it's going to be a volatile market for the meantime. As you guys are all tuning in, please like the video on Twitter and YouTube if you like our live streams and our usual viewer and are excited for the topics we're going to get into today. Without further ado, as usual, we're going to go over the market moves that we're seeing right now, currently today, the Prospero signals, what is causing the action. Then we're going to get into the news that came out about NVIDIA this morning, the impacts and the billions, multiple $billion charge that they're expecting because of the new tariff export impacts, as well as AMD. Then we're going to get into OpenAI, which released a new model with updates on its reasoning capability. It can now understand images of just sketches or whiteboards, even if they're blurry, which is pretty cool. And I'm going to ask George, we were getting concerned, or at least I kept asking George, is AI a bubble before this market pullback? Now I'm wondering if, since the AI innovation, tech, and growth that was driving the market higher, now that it's being pulled back by other causes, is it giving it time to catch up where the actual innovation and technology promises are going to be able to catch up to what was being priced in the market? Then we're going to talk about Netflix, which has earnings tomorrow, and take a broader look at the streaming industry. I want to talk about them as well as Disney, as well as Warner Bros. Because when you look at a price history for Disney and Warner Bros., it is pretty dire. They're trading at similar levels that they were decades ago. So is it a winner take all for the streaming industry as Netflix has just gone higher and higher in recent years and recovered very well from their pandemic pullback or post-pandemic pullback? Then we're going to talk about J&J, which was looking very good in the Prospero signals. It was actually even on our short-term bull list earlier today. Let me open up the Prospero app quickly and see if it is still there now or if the list has changed now that there's been a big swing in the market. Okay, J&J is still on the list. It's actually at the top, so looks like it's still looking good in the signals. It's leading in net social sentiment at 94, which is pretty surprising for J&J, and then also technical flow at 92. But it also has good net options, good upside, 71 and 61, great profitability. And it was actually one of the stocks that we were posting about on our Twitter. Every morning we highlight a stock, and every afternoon we've been posting about the QQQ and the SPY. And I saw a pretty cool stat for J&J, so we'll share that with you later on. Hello, George. Welcome to the stream.
Hello.
One more topic, and then to go through, and then at the end of the video, as usual, we'll do the model portfolio update, and it's sure to be a good one with the big move we're seeing in the market now. But lastly, today we're going to talk about Target. It looks pretty bad in the Prospero signals, which is conversely to Walmart and Costco, and their 5-year performances are very different. So we're going to talk about how, as an investor, you can try and see when a stock is going to underperform versus peers like Target has, if there's any way to see that before it happens, or how you should manage your portfolio if you are caught in the middle of something like that. But George, we are seeing the markets starting to take a tumble, which really started after Powell spoke this afternoon. The QQQ is now down over 4%. The SPY is down 3%. Dow Jones and Russell have just crossed 2% lower on the day. Let's take a look at SPY and QQQ net option sentiment quickly to see if they're back near the lows. Right now, SPY is at 11 and QQQ is at 18. So our signals never really turned too bullish, and we're seeing a pullback now. How are you feeling after Powell's comments and what we're seeing in the market so far today?
We're getting pretty blurry here, right? You see that? Like, am I delayed? Sorry.
Yes, your camera's actually, I think, frozen for me right now.
Yeah, I don't know it keeps saying it's turning on and off in StreamYard. I'm just going to reconnect the components and see if that helps.
Okay. Stick with us, everybody, for just a moment. We'll see if we can get George's camera working better. Just going to be me in the meantime. Mario said, George, you are slow. So yeah, hopefully people were kind of heeding the Prospero warning. I think George has been saying he wants to be very cautious in the investing as long as he's seeing the low readings in SPY and QQQ net options sentiment and hedging. And I think that might be the keyword of 2025 stock market is just hedging. So now we're seeing the markets pull back. As always, we have about 80 people in here already. So if you want to, I just read through the topics, but if there's any stock you want to hear talked about on the stream or anything you have questions about, just feel free to comment them. We can get to all of your concerns. Let me take a look across the individual stocks and see if anything is, if any of the Mag 7 are moving largely with this pullback we're seeing now. So starting with Apple, Apple's down 4.5%, Amazon down over 4%. Same with Meta, same with Microsoft. Tesla is now down 7% on the day. So Tesla's a lagger. Alphabet holding up a little bit better, down only about 2.5%. And let's check out NVIDIA, which already was a little bit weak with some news that we're going to get into later on. Let's see how they're doing. NVIDIA is now down almost 10% on the day. So the weakest of the major tech stocks. Looks like a weak day for semiconductors across the board. AMD is almost down 10%. SMCI is down over 7%. So this there. Let's see. Is this pullback? Yes, pullback is continuing. So it's looking like we might retest the lows pretty soon if things keep going this way. So the bounce, although ferocious, that one day we got that 10% bounce in the markets, is not sticking as of right now. So we'll have to see what happens in the overall markets. What is interesting today, and it's kind of it's a funny day for it to happen because our short later on at 4 p.m. across our socials is going to be, does Bitcoin trade like a digital gold? And we talked about that on Monday. And George said he doesn't believe, well, it doesn't right now, but will it ever in the future? He said he doesn't really think so. Bitcoin's actually holding up pretty well today. It's up about 0.5%. So it's a little weird to see with such a bad day in tech and the markets now. So Bitcoin maybe finding some footing. Let's see. Anything other interesting to note? I've been watching the stocks that have a large business in China now recently because I feel like they're going to get a lot of negative headlines and repercussions. Nike still near its lows, down only 2% though. It's kind of just hanging out at its lows, I guess. Starbucks now down over 4.5%, under $80 per share. So we're seeing a lot of weakening in the markets right now. I'm just waiting for George to get back in here, everybody. If you're just tuning in now, he should be in here any minute. All right, let's take a look at the bull list in Prospero. We'll go through the bull list and bear list. Do we have George back?
All right, I think this is working.
Is it working, chat? Can you guys comment and let us know? Because it still looks a little laggy on my end.
Oh, it sounds laggy for you? I mean, it looks good. It looks way better for me here.
The sound is good. We could just start, and if anybody has any problems, they'll let us know.
Oh, I see.
But
before it was the camera. Now can't get everything right at once sometimes. Hold on.
Jill said it's looking good. David said it's good. Everybody's saying it's good, so it must. Maybe it's my end. Maybe I'm a little laggy.
Yeah, we're good now. Though. I think we're good. There we go.
Okay, George. So even
the camera is getting old, and I feel like it was built by someone who really knows cameras. And then, as some people have seen live, I'm not as good with them. So I appreciate your patience on these. Sometimes I just have to send this out to one person, and then we'll be good to go. But you can ask the first question.
Yeah, so well, even in
Steven.
the 10 minutes that we've been live here and waiting to discuss today's action in the market, it just continues to drop lower and lower. So just the weakness is really kind of spiraling now. The VIX is up now 11% on the day at 33.48 right now, and QQQ is the laggard, down 4.22%. All the other indices are red. And it all started spiraling when Jerome Powell was speaking. Obviously, the SPY and QQQ net option sentiment has been weak in Prospero, even when we were kind of a few days ago coming off that ferocious 10% day, kind of maybe hopeful that the market could find some footing. But is it inevitable now that we're going to retest the lows? We're getting pretty close as it is. So
I got to check the update on SPY net option sentiment, but it was pretty crazy. It started yesterday at 41, and by the middle of the day, 37. By close, 28. By midday today, it was 15. I saw it as low as 9, but it's rebounded a bit to 12. And I think, where we're at with this, and we can share kind of like a Reddit thread actually that that's been circulating, where we saw this, but we actually saw an article that says it's actually institutions are still selling and retail is buying the dip. And that's just like very concerning, right? Because that shows that this, what we thought might have been a bit of a reprieve is actually just what we've seen, which is overwhelmingly retail investors just want this to be a good market and are having a harder time accepting that it isn't a good market. So I think with SPY and option sentiment falling so fast, I think we have to keep watching. I mean, I should have been more aggressive reducing my portfolio. But, with the news cycle being as it is, I think right now I'm like 7. I think I'm 1, 2, 3, 4, 5, 6, 7 long, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 short. I probably would want to be more like 6, 11 or more, but we are picking good. Like right now, other than Palantir, which we opened up yesterday, the other 5 longs we've opened recently are all in the green. So we've been picking good longs even as the market turned. And even Palantir isn't in a very big loss zone, but we'll probably hold now tomorrow. Like what you see with this market, that's very concerning in terms of how to play it, right? And one of the reasons we haven't backed off is, I think when we saw the pause in tariffs, right as they were starting, I think it does show that the Trump administration, however much they might say they don't care about the markets, they still do, right? And it doesn't mean they're trying to make them go up. I think, that was the expectation, but I don't think they seem to have some problems ignoring them, especially as the bond market started to go down, especially how that affects where the yields go up and how that starts to affect our ability to potentially raise debt. But where I'm at is I'm being cautious, holding on to some like potential high performing longs like Palantir, because you don't know if there is going to be responsiveness there, right? Well, we could wake up tomorrow and see, maybe a trade deal is released. Hopefully a trade deal is released, or maybe some other tariffs are pulled back, or there's some other announcement by the administration to make sure this doesn't get out of hand downward again. So that's why I'm going to stay pretty hedged in this, but it's a bad development, right? And it's a bad development because, all of the excitement over the pause and the optimism pretty short-lived, and the fact that even though a rally was pretty short-lived, we also found out it was a more retail-driven rally. That is even more concerning.
So do you think the market is kind of overreacting today, though, to Powell's comments? Because he didn't really say anything that I don't think like investors weren't thinking already about how, tariffs could be inflationary. and slower growth. So that was the like stagflation fears we've been talking about. But his comments really made an impact today. So what do you think it was so triggering for the market?
I honestly think the bigger story is Nvidia, and I think Powell just sent things further. If people kind of want to see what the article we posted on Reddit is, here it is. So I think that's the big concern. When you start seeing Nvidia, and we're going to go into this story, posting such a big charge, like we always talked about, like making it real, right? And the models needing to see tangible data to make it real and figure out how to calibrate, right? When you start to see Nvidia post something like that, ASML, lower, kind of disappoint. You can look at this and say, well, it was AI that sparked this huge rally last year, but even more than AI, it was very highly semiconductor driven. Like that's where we saw a lot of gain, semiconductor, cloud, things like that. And cloud's a little more insulated from this, but you haven't. And I think that's why you've seen, in terms of the Mag 7, you've seen like Google and Amazon fare better than something like Nvidia, just because, cloud is a little, cloud is a bit of an export, but we haven't necessarily, especially in the EU, seen, potential issues. That's one of the threats, right? That kind of thing could be what's like tax tariff. But we haven't really seen that. But yeah, I think when you start, it's one of those things where when you start to look at, our biggest export, tech, and, Nvidia is, if you're looking for a product that is viewed as one of the best products in the world, high demand around the world, any American product, probably Nvidia chips are the number one thing. And if they're basically saying, hey, this isn't even necessarily all done yet. Like this war isn't done. It might still ramp up. And we're already taking a $5.5 billion hit. That's what scared the market. And I know that because you immediately saw a bunch of stuff go down after they made that, a lot of tech, definitely a lot of chips. So yeah. And I mean, I got, just to like belabor the point a little bit, I got out of Nvidia. I got out of Broadcom this morning pre-market with absolutely no knowledge of how bearish Powell was going to be. The news around Nvidia was enough for me to see.
So you were talking about the $5.5 billion charge that Nvidia announced that they're expecting because of the chip exports, and AMD, similar story, $800 million for them. I'm wondering, is this area of the market like untouchable? I know you haven't exactly liked it. You talked about how you sold Broadcom this morning. So are you still willing to like take short runs on these stocks if our signals are looking good? Or is it just kind of like a no-go zone right now going forward until something switches in net option sentiment or, anything else?
I keep getting into it, and I got a small gain on Broadcom, so I'm happy about that. But no, like I don't think it's a good thing to have in your portfolio unless you're going to own a bunch of SQQQ. And look, I've been saying this all year, and I've actually, not taken my own advice a few times, even though I've gotten out of it quickly. And it's, other than this 2% gain in Broadcom above the S&P, I can't really think of any great outcomes I really had from it. So yeah, it looks like I was, even before I knew this tariff thing, I was worried about chips, right? And I said I was worried about chips even before the DeepSeek thing happened. That adds to it, and then we have this tariff thing and we see the real impact at Nvidia. I got to try to stay away. I got to take my own advice. I keep getting tempted out of it a little bit. I haven't taken big hits from it. SMCI is the only one that I will keep my eye on because I do think it's the only one that's undervalued. If it stabilizes more, if we see it have good returns, no more accounting problems, that's the only exception. And we have had some good runs with that this year. But other than that, Yeah, I don't know.
And we speak so highly of Jensen Huang on these podcast live streams. But like a CEO in his position right now, what is he to do? Is he kind of helpless and just, I mean, I guess if you probably asked him, he would never say like he's helpless. Like he'd probably just say, I have to figure it out no matter what the problems are. But if we're being real, like what can he actually do to like help the business at this point? And I guess nothing in the short term, right? It's more long-term stuff, maybe.
Yeah, I mean, it's not even, he does great product releases, right? But like what product release, they already have Blackwell. And they typically in their cycle, they probably won't have another chip until, probably the fall. I don't know their exact cycle, but just remembering like when the Blackwell was starting to circulate, I think it was like late summer, early fall. But it's even if they announce a new chip, like I still don't like that $5.5 billion charge, right? And that's just the opening salvo, right? Because actually, I think it was like the H20. I don't know what chip it was. I think that was the one that was specifically banned. But if it escalates and more chips are banned, like I'm concerned for two reasons. Like A, that's not good for our industry. That's not good for NVIDIA. NVIDIA is like one of the best growth stories of our economy, right? But the other issue is that it kind of hastens the need for China or other countries to try to replace those things, and that's actually the scariest part about this tariff war. Not that I think it will go on forever, but or even a long time, but that's a possibility, and that would be horrible. But even just what's happening now and the uncertainty is making people move away from U.S. goods. And actually, like I will keep repeating it, and we'll see if there's actually a thing. The scariest headline that I've seen for American businesses is that the EU is considering getting rid of tariffs on Chinese EVs and replacing them with a minimum price. And that is just such a huge departure from the policy. And that's what happens. And this isn't just about trade, right? The EU being tighter allies with us, they would have never considered this a year ago. They just wouldn't. The fact that they are even considering this is a very scary proposition to what I'm talking about, right? The trade war ends and we cannot get back to where we were because other places have looked for replacement items. I think that is the scary thing that our economy is facing right now.
So over the course of the past 2 years, we've been covering the AI growth that led the markets, and we were covering the tech innovation the entire time. And it's funny because like the market is in such a different environment, but that doesn't mean like the pace of AI innovation stops, right? So OpenAI came out with their newest model that they said can now understand uploaded images of whiteboards, sketches, diagrams, even handwritten stuff that's low quality, which is pretty cool. I'm wondering, I was kind of badgering you over the last couple of months of when the market was booming of like, is it an AI bubble? But now that, all stocks are being dragged down by other factors, is it giving time for those AI-led stocks, time for the tech to catch up with what the stock prices were expecting? And maybe it won't be an AI bubble. It's just kind of like other factors are leading the stocks lower, but it's giving it time to catch up.
Well, where it doesn't look like there's an AI bubble? Anytime I see AI news with Alibaba or Baidu, like things look pretty good with their stocks. Whatever there's an AI announcement, and again, that's what's scary about all this, and it's just the timing. I just like it's just so frightening for someone that like has been around the American economy for so long. Because tariffs aside, like when DeepSeek got announced, that was the first time I've ever said maybe they've passed us. Because I don't know, for people that have been watching me for years now, like the one thing that I always said about America, politics aside, all else aside, America, because of the way we're set up and the reward system, we win on innovation. We win time and time again. That's our best exports, innovation, right? And DeepSeek was, and you could say everything, all the caveats, they lied about this, blah, 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 but the stock market is about perception, right? And the way the stock market reacted to that, and the way, Chinese stocks are up, and U.S. stocks are up a decent amount, and U.S. stocks are down a decent amount this year, that is the frightening thing. I actually think that American AI is in more trouble than Chinese AI. But I do think, in terms of the bubble, I don't think it's a bubble that has anything to do with the way AI is priced. I actually think the danger of where it could go down a lot, or these could be priced down, is their growth. And we always talk about, in times of economic difficulty, growth is priced down. Growth gets hit the hardest. Look at today, right? It wasn't, and I'm actually shocked to see how far down Palantir went today, because they had a major AI announcement that, what was it? I think it was, I don't want to say, it was the UN. No, it was NAFTA. NAFTA basically said they bought a defense AI from Palantir, and they put it together in 6 months. And I don't know what the fuck that means, right? I could guess. I could guess that it means it is a military application. So my best guess on what that computer program does is shut down other systems, like seeks out other systems, penetrates them. Maybe you launch a missile, it penetrates the missile, like the system, the guidance system that launched the missile, get rid of it. Maybe it's not that, but maybe it's fighter jets that are coming into space, and you figure out a way to hack into the comm systems or something like that. That is my best guess for what it is. But the fact that, NAFTA is not exactly who you'd expect to be buying military AI systems, right? So I think that's a huge headline for Palantir. And to actually see it drop, right? I actually think, because Palantir is so expensive from an EPS standpoint, I actually think that's more about the fact that it's a lot of growth is priced in, including with that announcement, more than any issue with AI. And that's the proof right there, right? I'm not sure I could write up a better case study sales for Palantir than an effective military grade AI sold to a place that you wouldn't expect to be buying a military AI, who comments how quickly it got built and how happy they are with it. You can write a better case study for Palantir. So that's why I think it's not about AI, because that's about as exciting as it can get for them. It's about the growth multiples built into the stock around things like that. And people just, those valuations are going to get hit with high growth multiples first. And that's the only thing that fits why it's so down today. I'd love to have other people call out some names. But to me, looking at these, looking at my red list, it definitely looks like some stocks with high growth multiples. But test the theory. A stock with a high forward EPS or a high EPS, check if it's red today. That would be my guess.
Well, I have a question. Since there's so much fear, is you're never going to get these Mag 7 stocks that are the favorites of most investors for cheap unless there is fear in the market. So do you have to kind of bite your tongue and just buy some of these stocks, knowing that, whether it takes a year, 3 years, 5 years, if these stocks are going to go up over time if the market goes up, and you're not going to get them for cheap very often.
That's what's so hard right now, right? Is Google cheap? Google looks very cheap compared to the other Mag 7, compared to how long it's been around, right? Historically, I would think this is probably pretty low for Google on PE. We could probably pull up a graph maybe next time I'm not talking. But is that cheap? Are they going to have trouble in the EU? whether it be, lawsuits against the Play Store, or whether it be perhaps new tariffs on cloud services or consulting services around cloud. Like, it is very, very hard to figure out if Google is actually cheap given those statements.
So a company I don't think anybody is envious of is Netflix, because they report earnings tomorrow, and I think they are kind of the guinea pig. They're the first real growth stock to report, I feel like, this earnings season. So what are you expecting going into that? But then also, I checked around the streaming industry and I looked at some other of the favorite streaming stock, Disney and Warner Bros. And it's pretty shocking when you look at long-term charts of them. So Disney is at the same price that it was in 2014, so 11 years ago. Warner Bros. Is even worse. They're trading at the same price that they were in 2006. So just Netflix has, I guess, eaten their lunch time and time again over the past 2 decades. So is it a winner take all? And how do you feel about Netflix being the first kind of very growth oriented stock to report tomorrow?
Netflix is one of those stocks that I feel like a lot of people probably kick themselves on, because, you look at a stock like Nvidia and the way it's priced, PE, and there's a lot of people that still invest in it because they see a really clear path to more and more and more and more sales. I think the fact that Netflix is doing it in a business that is, generally not doing well for other customers, looks constrained, other streaming services come up. I feel like that really works against them, because it's not like AI chips where you're like, everybody's going to buy more. But if you're looking at just the numbers on Netflix, right, I would say both the way they've improved and the way that Wall Street responds to their improvements, you're talking about a company that I think a lot of people wish were in a more obvious business, because they probably would have gotten involved. And, they're priced to win and win even more, right? And I'm of two minds on that. One, I wouldn't bet against them. But two, it's so, the content game is so hard. And look at who they're up against. Apple is strapping in for the long haul. I don't think Disney's doing a very good job. I have a membership through my family that I don't pay for, and I rarely watch anything on Disney, but I'll hit the other ones. I'd say, actually, other than Netflix, I probably use Paramount Plus and Peacock. Those two right after, you throw in a little Apple for some of the premium shows, but Disney is way down. So yeah, they should be priced like that, because, if you look at things, people aren't going to the movies as much. So the Disney blockbusters, they don't have that as much. Streaming was supposed to be the solution. Parks, I feel like people view parks as a much bigger risk. Much bigger risk in something like this, where it's just something that's something that people cut back on, right? So you're not going to be, it's not a defensive good in that sense. And people, debt's been rising for a long time. Consumer debt, and then now there's, some actual consumer spending worries. So yeah, they're not the business that they once were. And I even think I saw a friend post on, who runs an RV business, post on their page and said their bookings from abroad have gone way down. And I don't know the numbers, but how much, throw out consumer spending in the US aside, how much tourism do they get from other countries? I would imagine a fair amount. And if other countries are cutting down on tourism because of this trade war, that's just another thing. But yeah, it's so hard, because when you look at Netflix, I don't know where its upside is. I've owned it a few times, but generally I just haven't seen attractive upside for it. Upside breakout. Yeah, it's at 62, right? And for a large cap like it, I generally can't really even consider it until it's at 70, even though I have owned it a few times when social sentiment's high, when net option sentiment is high. But I mean, even GameStop, I think is like in the 80s on upside. So that just tells you how much the problem continues to be for institutions. It's just people continually look at Netflix and say they do things great, they continue to grow, they're the only ones in streaming that I think people really, really believe in. Yet no one really bets on them long term, ever. And I think that says something about just how challenging what they're doing is. But that all being said, I'm not going to do it because upside isn't long enough. It would be interesting to come back to this. I wouldn't be surprised if Netflix did considerably better than NVIDIA over the next year.
Timestamp that, everybody. That's a bold claim right there. I'm going to remember that. Okay, I'm going to write that down in my notes once you start speaking again. But, I have a Netflix show recommendation for everybody. We could all use a little entertainment in these days, right? I just started watching The Queen's Gambit, which is actually, it came out a while ago, but so some have probably seen it, but phenomenal, George. Have you seen The Queen's Gambit on Netflix?
Yeah, you're like years behind, Steven.
Yes, I am.
It's great. Very. It's a gripping. It's a really good one. I've actually been so busy this week. I haven't seen The Last of Us, but as a newer show, watch The Last of Us. Like, there's 2 seasons. It's on Max. Oh, I left Max out. Max is actually maybe even my number 2 before Paramount Plus. But yeah, gotta watch The Last of Us. I think it's my favorite active show on TV right now.
I'm not a big show watcher. Is that show The Last of Us on Netflix? They don't put out a whole season? Do they go week by week?
No, it's on Max, and they go week by week. And yeah, it's like one of those Max shows. Like, one thing Max does better than anyone else is like the production values of those like big Max shows. And like Last of Us, I think is just like, the acting, the shots, everything is just like amazing. And it's after a game. But yeah, while we're on the last thing on Netflix, new season of Black Mirror is out, maybe one of their best. They've been shorting us a little on the episodes recently, but this one I think is 6 episodes. They did a sequel to like the Callister one, which is one of my favorites, and that's 90 minutes. Yeah. That's my top Netflix rec right now. And if you haven't watched the Black Mirrors, like, watch them, because I'm probably like, as a hobbyist, I'm very into futurism, which is kind of like science fiction combined with science. They kind of meet in the middle about like what's actually like possible in the near future. And yeah, if you want to see what's coming in this world, watch Black Mirror. But be forewarned, most of it is not fun. But hey, at least you won't be surprised when it happens. There's already been some things that the show's covered that have come true.
I agree with the Black Mirror recommendation. That's an amazing show. So you get a little stock picking and show picking on this Prospero stream today. So there you go, everybody. I want to spin to J&J, which has been looking good in the Prospero signals. And I actually, for everybody that doesn't follow us on Twitter, you could follow us there, or X. I post about one of the stocks that's looking good in our signals every morning, and this was the one I chose today. And I saw that they raised their dividend by 5%, and it's actually the 63rd consecutive year that they have raised their dividend. So is that the kind of stock that, is perfect for this market environment that we find ourselves in, that level of stability?
I feel like, for lack of a better term, I have problems finding really clean stocks right now. And like, I think J&J looking great in the signals. I might think about adding it as a result of that. But we've got this RFK thing looming over the whole healthcare industry. Then we also have like the thing that we're expecting incoming tariffs on medications. And medications are tough because they're already so expensive, especially compared to the rest of the world. So like passing that on to the customer, like I guess some medications you just have to buy to live. But yeah, like I look around, I look at sectors, I look at companies, and there's nothing that's all that clean right now. Like I'll take a look at, the one thing that I've now had in my portfolio 2 weeks in a row is gold stocks. I don't know why I feel so stupid. I actually got out of IAG this week and into RGLD, and for whatever goddamn reason, IAG is up a lot more than RGLD. If anyone knows why, I haven't done that research yet, but you'll save me a little time. But yeah, that's just driving me absolutely crazy why that happened. But it did look better in the signal, so I'm not going to beat myself up too much. But yeah, I'm going through this, and like, I think the only thing, I'm confident in some shorts. But on the long side, the only thing I'm really confident in my portfolio right now is gold. And that's just weird. Normally I can find at least like a small list of stocks that I'm just like, okay, I feel really solid on these for the next month. But yeah, I might, with J&J looking like that in the signals, like traditionally I might say that, but in practice, too many risks. So that's why we're just like, we're actually trying to balance a little bit with feeling like we need to cycle through things, but making less moves. Because I think when we make a lot of moves, especially in a high conviction portfolio, it overwhelms people. We kept Under Armour a day too long, and I was annoyed at myself about that because it had like a 51 momentum score, and normally on Monday, and I would have gotten that out the door before it was up like 6% the next day. So we're calibrating, but yes, I think because we have a short overall timeline, we're trying to at least stick with stocks for like a few days just to make it easier to follow. But like most stocks I have in my portfolio, I want to completely reevaluate 2-3 days, and they change drastically in momentum score. Like one day one sector's up, the other one, like I think for that, like Lockheed Martin is a good example, right? Added it on Sunday, things still look good in the signals. It had a bad Monday, Tuesday, it's back today because stocks like that gold stock, Lockheed Martin, when people are worried, those stocks are going up, and when they're not worried, feeling a little more bullish, those stocks are going down. So it's more just like this worry cycle that's happening so fast that's making us need to like rethink our portfolios super often. And that's not ideal, but that's also what I'd recommend for anyone.
So I want to get through one more topic quickly here. I was looking in Prospero through the signals, and I noticed that Target has pretty bad signals. When I looked earlier, they had I think they were in the single digits for upside. Now they're up to 24. But still 24 upside, 64 downside, 46 net option sentiment as of right now. They've drastically underperformed their peers in their industry over the past 5 years. So Target's negative 13% in that time frame. Walmart is 125% up, and Costco is up 220%. So what I'm curious is, you can't change the past, but if you're someone who doesn't want to be stuck in a lagging stock amongst its peers going forward from here, is there any signs you could look for? Or is it specific to Target's story that they're so behind their competitors?
This is why we always say, like, you have to look at signals, but you also have to like take a look at the macro view, right? And I think, yeah, like that huge disparity. We added Walmart to our trading portfolio this week because it looks so good, especially for a consumer defensive stock. But that is such a stark contrast. But I think the explanation for that is just where we are in terms of the cost of goods, where I think Amazon has become such a staple, right? You could almost consider it consumer defensive in some ways. It's not really a traditional consumer cyclical thing because it sells everything, including consumer defensive goods. So I think it is more of a consumer cyclical, but you get what I'm saying. Target, on the other hand, I think it's priced. It's just not priced as good as Walmart. So that sweet spot, I think, where it used to have, I think in probably better economic times, especially, and I think people are grading it down because they're expecting things to get even worse. In better economic times, you might go to a Target instead of a Walmart, because you're paying a little more, but you're definitely going to get a quality upgrade. I think especially like the produce and things that you get in Target is going to be better. But I think now, with the rise of Amazon, I don't think people view Target in the same way, and I'm not sure when that's going to change. I think Target really needs more economic stability and this tariff thing to go away. I think they're they really stand to reason. Also, because if you think, if goods prices raise, right, that's going to make people even more sensitive to the prices at Target. And one of the best things, and Target has this to an extent, but Walmart wrote the book on this. Walmart has a really good ability to negotiate with suppliers. And so Walmart is also better positioned than Target to insulate themselves from this. For no reason, even if they had the equivalent ability to negotiate with suppliers, which I don't believe they do, Walmart just starts cheaper. So I think people will continue to do that. And I think there's a lot of red flags for Target. There's stores, there's not a Walmart in New York, for example, but there's a few Targets in New York. And paying for that real estate, I think they probably overexpanded. And we might see on the expectation that the good times were going to keep rolling. And we might see them contract a little bit. I'd actually be interested to see what the difference in margins were on their more urban populated centers versus the ones away. But yeah, I think it's definitely an issue for them.
Okay, I'm unmuted. All right. So throughout the stream, the market has kind of found its footing. So we're at similar levels to where we were in the beginning. Going to be interesting to watch the model portfolio update, but we'll see you on the other side, George.
Yep.
All right, everybody stick here with me. We'll go through the Prospero signals one more time before George joins us back in to see where the net option sentiment for the SPY and the QQQ are. Thank you to all over, actually, 1,700 of you that have tuned into the stream today. Give us a thumbs up on X or YouTube, wherever you're watching, if you haven't yet. Let's take a look at the VIX is actually still climbing, even though the markets have relatively unchanged levels since the last time we checked, maybe even slightly higher. The QQQ is now down just 3.7% on the day. So I think it was just over 4% last time we looked. But the VIX is up 14% now. Let's take a look at the SPY and QQQ net options sentiment. Okay, we'll look at SPY first, and it is at 10 currently. So it is pulling back quite a bit from the levels it's been at over the past couple of days. It was as high as 40 a few days ago, then in the 20s and teens. But we're not back at that zero flat line. So actually, I want to ask George when he gets back in here, is there any positive to take out of that we're at least not pinned back at zero? QQQ is at 24 currently. So holding up a bit better than the SPY, now back above the SPY. I think we had seen them flip in recent days. So the QQQ is looking slightly better as of today. Let's look lastly through the Mag 7. Check back in on NVIDIA, Tesla, the ones that were lagging the most. Okay, it looks like we're seeing some stocks kind of come back from their lows now in the last 30 minutes until close here. Tesla was down almost 8% at one point, now down 6.39% and coming back. Maybe we'll finish the day with a little bit of buying activity. NVIDIA was approaching 10% down. It actually crossed 10% for a moment. Now it's down 8.4%, so stocks are coming back a bit. Let's check out Bitcoin, see what that's doing. Bitcoin's also going higher, up 0.75% on the day today. So things are closing off their lows. So looks like the market found its footing for today, at least.
All right, here we go.
Here we go. We're seeing some pretty low readings for SPY at 10 in net option sentiment and QQQ at 24.
Not the day low, but
It looks like the
But
market's kind of doing a little bounce here into the close as of now
well,
from
it
its
got hit
lows.
pretty hard.
Yeah.
I didn't think. I mean, it's just not enough. Like, it's not enough to have the bottom fall out like it did. Like, there's enough hope of deals and things like that. I wouldn't actually be surprised to see it rebound a little, but
George, is there any positive thing to take away from the SPY net option sentiment just not being pinned at zero like it was like a few weeks ago? Or no?
not really. I mean, it's falling pretty fast, right? It's not just going to go straight. It's not going to just go straight from like 40 yesterday to zero. It's got to take a
Mm.
little bit of a trip down. So I'm not feeling that positive. Like I said, I think the only reservations I have about like making this way more bearish is just that um, I think there might be a news reaction to this. Like, the White House might come out, there might be an announcement about deals, there might be, who knows. So, where are we here?
We are at
SPYQQQ.
10 for the SPY and 24 for QQQ. This shows pretty clearly that we are in an NVIDIA-driven decline. What goes up must come down.
Okay. Oh, damn. Oh, look at that. We're definitely adding J&J. Looking good on momentum score. Interesting to see NVIDIA still looking good. All right, let's see what we got here. All right, we're grabbing. Okay, let's see what we got. Do I really want to do this? Blue. That is very small cap, but I think we already have an open race, right? Yeah. Lululemon has been bad. All right, I feel good about this. Just in time. All right. We're doing that. And then let's take a look at these. Yeah, look at that. I'm going to get out of a lot of these. All right, this is going to take a bit longer than I thought. But, might as well do it here for the benefit of everybody. Yeah, those are all looking solid. All right. So Owen is rebounding. Diode is also rebounding. What's going on with EFT? Okay, so we want to get rid of. Okay. All right, so we're getting rid of all those. All right, so we are getting out of ON, diode, EFT. Okay. All right, now let's see what we're adding. Let's see what's going on with LSCC. Lattice semiconductor. Okay, this definitely seems like. Which ones did we just get out of? TRMK, diode. I think diode's tech too. I think that's 3 tech. Yeah, semiconductors, okay. I feel like every time I do PX, it doesn't work out for me. Oh, that's a new one. Damn, ASML. I think that's. kind of want a semiconductor. Ooh, SSNC. I think that might be. IT, I'll take it, but it's not really what I had in mind. No. LSCC, yeah. LSCC. SSNC. I've been burned with Forum before, but no, I want something larger. Or let's just do. That's interesting. Or do I just go with ASML? I mean, I feel like it's been hit pretty hard already. Could rebound. I'm going to take a risk. Add that. I kind of do feel good about this XPEL, even though it's small cap. Oh. No, never mind. I mean, Lululemon. Just don't feel great about Lululemon. Let's see. I at least need a fourth replacement. It's Target. I just don't. I worry about it rebounding because it's been hammered so much. Actually, it hasn't been hammered that hard. All right, we'll do Target. And now I'm considering switching out Google and Netflix, but I think Google's just 94 options in it, 98 net social. I don't know what's going on with Google, but never mind that. All right, here we go. We're doing the last little bits. Any questions? This is the call for questions. Once I'm done with this, I am signing off.
No questions in the chat, but everybody gets to enjoy a 3-day weekend from the stock market this week. I think a lot of investors are probably happy about that.
Oh, yeah. I forgot about that. That's going to be great. All right. We flipped. All right. Last call for questions.
No questions in the chat. Thank you, everybody.
Oh, damn.
Whatever.
We finished in the green on Palantir. Look at that.
Wait, Palantir was green today?
No.
Or
On
just our
we
position?
grabbed it yesterday, so we were in the green. I
Okay.
thought that was going to be red. All right. Awesome. Thanks, everybody.
Thanks for tuning in. Thank you, George. We'll be back normal time Monday. See everybody then. Bye, guys.